Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. And here's your host, Paul Winkler.
And welcome to the Investor Coaching Show. Paul Winkler, talking about the world of money and investing, along with Arlene Brown.
We're gonna have fun.
We always have fun. We were born having fun. No, I wasn't born having fun. Probably cried just like everybody else.
I like your outfit, though.
You like this? You know, it is. It's too cold out to wear anything, formal and. Well, not that I ever dress formally on the radio, but yeah, man.
You should have seen his outfit last Saturday.
No,
I seen him
Leviticus.
in person.
You know, I got grief about
it.
my shirt. It's just like I looked at his shirt and I said, I've never worn this shirt before, right? And I think I found out why I never wore this shirt before, because they're like, no, Paul, you probably don't need to wear that shirt again. What's wrong? It was what do you think, Livity? It wasn't a bad shirt. It was it's just.
You know me. I like old school, like 80s and 90s men clothing.
That's what it was. It was old school. So my wife probably bought it that long ago.
But what look do you have now?
No, you behave yourself. Okay.
Be nice over there.
No, I was just saying it's my redneck look, but
You dress like a redneck?
What is a redneck look?
I got a nice. It's a flannel. Yes, that's right. I got my Rottweiler outside, and
You're very diverse.
yeah,
in your fashion
You know me, and
sense.
I'm all about diversification.
Talking about diversification.
Okay. What?
Well, the data. If you look at goodbye, FAANG.
FAANG.
Goodbye.
Facebook, Apple, Amazon, Netflix, or FAANG with Microsoft.
That was like most of 2021, and then by November.
Yeah, if you took those out in 2020, if you took those stocks out, the market, the S&P, which is one market of many, which was up 18%, was only up like 2 or 3 if you took those stocks out. What a change.
Yeah, but then now, from November, it was like, now it's like math, like metaverse.
Right.
Apple,
Well,
And
they
then
had to change the name.
And now, it's no longer that. It's already Apple, AAT.
Are those the ones that are still?
Yeah, the top 5.
Okay.
The top 5.
Right.
There's a difference now in the top 5.
But
still.
What was the big deal?
Well,
that
the
I
big
thought?
deal is still that top 5 is still 39% of actually 45%. It used to be 39% in 2021 and 2021. 45% of the movement of the performance of the S&P 500 came from that top 5.
Really?
So it's just amazing when investors are asking, well, the market is up by this much, okay? Mm-hmm. And why is my portfolio not having that? Okay? Because
of that particular market.
Yes.
Right.
Because you're comparing it apples to oranges. And it's not
Apple Store. Now, you didn't mean to choose that particular metaphor, did you?
Well,
Apple Store. Right. Okay. So if we look at what happened, though, which is interesting, because we tend to focus on, and this is a bias coming out of. Well, you're kind of pointing out a bias right now, which is that what we do is we get, this stock didn't do any good, and this stock really crashed, and this went down. Let's just focus on the 3 that remained and did well, as if we knew ahead of time those would remain and do well. I don't know if I'm making myself clear that this is okay. If we look at the entire market, you have tens of thousands of companies. And when we talk about those tens of thousands of companies, we don't look at a whole at what all of those companies did. What we tend to do is we only look at the winners. And it's not unlike the sports world. thousands of people in the sports world. We're getting ready to go in the Olympics, but who are we going to be talking about almost exclusively for the next? I don't know how long the Olympics go on. Is it a week, 2 weeks, or whatever?
There is an Olympics.
There is something. I know. I get it. Yeah, well, mainly the political aspect of the Olympics is all anybody's talking about. But even still, if we think about who are we talking about, it is going to be the ones that are the medalists. There are tens, hundreds and hundreds of athletes, but only a few that are going to be the medalists, and that's only the ones that we're going to talk about. And the same with the stock market. All we do is we just pick out the winners and go, hey, what about this company? What about that company? What about that company? 2 years ago, it was FAANG. So basically what you're saying is now we're not talking about FAANG, we're talking about some portion of those 6 stocks?
No, 5 stocks. The AMAT.
I'm talking about FAANG. It was Facebook, Apple, Amazon, Netflix, Google, Microsoft. FAANG. Okay.
But then now it's no longer Facebook is
Meta,
out.
And the reason, but there's a bigger reason we're not talking about Facebook anymore. And right?
Yes.
I mean, it was they had the subscriber. People that were actually active on Facebook has dropped significantly.
Well, the earnings too.
Well, that's why the earnings are going down, because who wants to pay for advertising when nobody's actually seeing the advertising, right? Or fewer people are seeing the advertising. So, and that was the big shock. It was literally this news coming out going, hey, you know what? It's kind of going down. And it was even Netflix had some of that too.
Well, Netflix, yeah, because now people are actually working outside and going outside. They're no longer cooped up in the house. So
maybe even showing up in movie theaters once in a while.
So subscribers are down. So both stocks.
What's that story? Stuart's like, he would have had a mic, but
Can you hear me?
Oh man, I can hear you. Isn't that nice?
I was just saying, there's a lot more competition. Every major cable provider.
You have Hulu.
Well, exactly.
You have Paramount.
Yeah, exactly. You've divided, and that's just like
Disney,
anything else. So you're dividing up the market. But I think it's fascinating that really year to date, it is not that area of the market by any stretch of the imagination, that particular area of the market being large U.S. growth companies, that is stealing all the headlines. It's totally different areas of the market, and it's because of some of the changes that are taking place over in European markets, some of the things that are taking place as far as how countries are starting to open up a little bit, and as I've talked about in previous weeks, now it's not a pandemic. It's endemic. This is something we're here to live with. There's been the news people have been talking about all week long. That 70% of Americans are like, let's get on with this. Let's move on. We're done.
Our lives. Yeah.
There was with the news coming out of one of the universities,
Johns Hopkins University
study, saying literally the opposite. Yeah, literally saying the opposite of whatever. So in essence, what has happened is that has caused people to go, okay, so, maybe it's time to move on and do something else. But that leads to, there was an interesting article in the Wall Street Journal, and it was talking about the American labor market mystery. And I thought this was fascinating. It says, since bottoming out in 2020, early 2020, the U.S. economy has handily outperformed other major advanced countries, except for one crucial dimension, and it's its labor force. Now, if we look at what happened, and this is one of the reasons that we diversify, folks, you just don't know what's going to happen in this particular area. But for literally the first part of 2020, we had large U.S. companies did very, very well. Why? Because they were perfectly positioned for an entire society that was hiding from each other and not going out to restaurants, not going to work, not doing anything, not going anywhere, because it was technology, and we need the technology in order to have our Zoom meetings and all of, have our computers, and people were gearing up in that particular area, and then they were gearing up in gaming, pieces of gaming equipment and things like that. And then you go into, okay, Biden's president now, and now we also have, at the same day, you have a vaccine that has come out, And when you have the vaccine that comes out, all of a sudden people go, hey, maybe there's hope that we can start to open up again. Well, who benefited most from not being opened up was the big companies, the growth companies. So if you look at that from that point till now and you go, wow, one of the worst performing areas of the market from that point until now has been large U.S. growth companies. The absolute best performing area of the market were small value companies, smaller companies that were more distressed, and they were distressed because of what happened in 2020. That's part of the reason they were distressed. Mm-hmm. So then what happened is those companies, small caps and micro caps and then value companies come roaring back comparatively way, way better. And then, you go, well, that's really, really interesting. And then you go in and open up the paper and look at, hey, what's going on year to date so far now? Because, we're kind of going, well, we had a little bit of a rough patch, Omicron, and, companies closed down and people weren't, there in their homes. A UPS article, they were talking about UPS, we're going to make deliveries and nobody's home, nobody's there, nobody's at the offices. And they're like, hey, what's going on here? So they're talking about how that's happening. And then overseas, we're starting to see a little bit of opening up. So what happens is now we hear this news, and then if we go, hey, let's act on this right now, it may be too little too late because of the fact that some of this stuff gets priced in pretty doggone rapidly. But there is literally about there's a significant swing. International value, for example, being up like almost 6% year to date. And then you look at other areas of the markets down 6%, down 5, 6, 7%. And that's a pretty big swing. Now, will it continue? It may. I don't really know. It just depends on news coming out. But I think it's interesting because it's something that I've talked about here and going, hey, you know what? International markets have not really had the recovery that U.S. markets have. And the reason they haven't had it is because of the virus and how people actually responded to it overseas in other markets. So between the fourth quarters of 2019 and 2021, the labor force participation rate. So how many people are actually participating? When you look on unemployment rates, it doesn't help you a lot. Mm-hmm. Because when you look at the unemployment rate, that's how many people are looking for work and can't find it. So that's really what that is. And you have structural unemployment, things like that.
How many people are willing to work?
Yeah, and then that gives you an idea of participation.
Yeah.
How many people are participating. And the population between 15 and 64, either working or looking for work, dropped actually almost 1% in the U.S. When that may not seem like a lot, but that's a big deal when you're looking at that type of data. While rising in Japan and Canada, so actually you had a different response over in Japan and just to the north of us in Canada, according to the Organization of Economic Cooperation and Development. And they said that the Eurozone's participation rate was also well above pre-pandemic level in the third quarter. So it tells you, it's and this is where we see 401ks. They're just anemic when it comes to investing in international markets. And typically all they'll give you is large international, if you've got anything. Target date funds, very, very low on international compared to U.S. And I think it's a huge mistake. And it can be because this, again, I'm not making a prediction, but I'm saying this is something you've got to keep in mind as an investor. Because I've seen too many people that have basically said, forget it, forget international. I've heard advisors say that. It just reminds me it's the polar opposite of what I heard when I entered this industry in 1989 and got my first securities license. I got Series 6, and then I went on and got Series 7 as well, and Series 63, and then started going in and getting all the financial planning designations that I've gathered. But back then when I first got the very first designation, I had these older guys coming up to me, going, Paul, put their arm around me and go, hey, Paul, congratulations, you got that test passed, and good job. And by the way, when you're guiding your clients, just forget about U.S. stocks. Just don't even bother with it. Put your clients in international, and because we have 2 decades, Paul. 2 decades is a long time. 2 decades of international companies outperforming U.S. And then, of course, the 90s, it's a whole different direction. U.S. just trounces international. And then you go, well, and a person might have gone, hey, you know what? I see a trend. 2 decades of international. Now it's going to be 2 decades of U.S., right? Because we see patterns. We're good at seeing patterns as humans, right? And what do we get? 1 decade of U.S. outperformance. And then we get a major drop in U.S. stocks, right?
That's by the way, in the 2000.
Yeah, 2000, 2001, 2000, exactly, Arlene. 2001, 2002. And then you have an entire decade of international. And it wasn't a clean decade. It wasn't like, 2010. Okay, now it's our turn. That wasn't the way it worked. It was just, I don't know exactly what the breaking point. It might have been a certain month of the year that it was a breaking point or a difference, and maybe off a year from the decade end. But the point is that, man, it was a sea change. And, you just can't predict it. The article, back to the American labor market mystery from the Wall Street Journal, the sources of the discrepancy could help answer another question. This is interesting. Why U.S. inflation is higher than in other countries? Hadn't heard that anywhere before. I had not heard that anywhere, that we are having a bigger problem with inflation than other countries. Wait a minute, the other countries had the bond buying programs, and they had the increase in the money supply, and they had the government programs paying employees for not working, in essence, right? Furloughing. Matter of fact, he talks about that in just a second. I'll get to that in a second. But it was, wow, so if we have less inflation in other countries than we do in the U.S., that means the purchasing power of their currencies is strengthening, which may mean that the dollar weakens.
But that's not true, though, in 2021, because...
No, I didn't say it happened last year. I'm saying what might happen. Yeah. I'm not... No, you're right. You're right, Arlene. I'm not saying what happened last year. I'm predicting the future. No, I'm joking. I'm joking. I don't try to predict the future here, okay? Let's just get that. But I just... conjecture, I like to think about what might be going on because it's kind of fun. But here's my reason for it. Let me give you my motivation for doing this, okay? My motivation is that you don't ever throw the baby out with the bathwater when it comes to diversification, like I see so many people do, and I see the investment industry do on a constant basis. So what happened is this. Is the inflation. Now, okay, so if you don't know where Arlene and I were going with that, the weakening of the dollar, if the dollar weakens, it takes more of your dollars to buy things overseas. Now, it can equalize. There can be an equalizing effect. If, let's say, that they don't have inflation, their prices aren't going up. And if the dollar weakens, the prices do go up. So you could have an equalizing effect from the standpoint that because their prices didn't go up, their stuff's cheaper, right? Yes. But because the dollar weakened, their stuff is more expensive, right? So they basically offset each other. Think about it that way. And you go, oh, my brain's blowing up and I need duct tape for it. But here's the point. It may be one, and this is why it's so stinking hard to predict markets. It's a really good point to make here. Because did their inflation rate not going up as much? Is that going to be more impactful, or is the dollar weakening going to be more impactful? Which one is going to have the bigger impact on pricing and therefore demand for products around the world? And it may be that it's just as simple. Maybe what happens is, forget the U.S. dollar. It may make their products that are made in, Germany, less expensive to somebody that's buying a German product from France. I mean, it may be because they're...
That's funny.
Yeah, you think about it, how complicated this can be. It is. It's like, wow, my brain's blowing up. So during the pandemic, and I'll finish this because we got to run to a break. But it says, during the pandemic, European and Japanese employers furloughed rather than fired employees, with governments subsidizing the furloughed workers' salaries. The U.S. had its own version, Paycheck Protection Program, which gave forgivable loans to businesses, a lot in the news right now for all the wrong reasons, that held on to their employees. But the impact was relatively small. Most federal support came through enhanced unemployment insurance for millions of laid-off workers. So what happened? What's the decline of the labor force? Well, as a result of all of this stuff, the bonds between employers and employees were more likely to be severed in the U.S. than in Europe. So what happened is the U.S. employees said, hey, you know what? I'm not working for you anymore. I'm not going to come back and work for you. I wasn't furloughed. I was, put out to pasture. And now what I've gone and done is I've gone and gotten me a degree. And I've gotten new training, or I found somebody else or something else I would rather do for a living.
Yeah.
So it has had interesting dynamics.
It's the loyalty dimension.
Yeah.
Between the, yes.
Yeah. And it may take a little time. It'll probably eventually people will start to come back, or a different group of people will come back and start working, because there's certain industries that are having shortages and things like that. That's part of what's leading to some of the inflation. Having to pay more people more money to get them to come to work, because we lost the old people that used to work here, and maybe we need more people to do the job of the people that had experience that left.